Hello guys, welcome to my channel. As the first forex content creator in my family, let us look at technical analysis. So today we'll be looking at bearish market condition. So in a market situation where we have series of lower lows and lower highs, okay? So this type of market movement is known as what? A bearish market structure. So a bearish market structure is a behavior of the market where price is decreasing in value consistently. Okay, so that is to say price will form a high, then form a low. Now there will be a push to the upside trying to go above this high. But unfortunately, price will not be able to go above this high. Then price will continue coming down to break structure to the downside. Now, this is as a result of supply overwhelming demand. So supply is usually coming from what? The sell side. That is from the drop. Coming from the top to what? Down. That is a decrease in price. Now, buyers who are on the demand side of the market will try to push price higher. But because sellers are already positioned in the market more than buyers, market will continue what? Failing to go higher and what? Keep breaking structure to the upside. Now, price will get to a particular point and try to push higher. Then supply will come in, reject price, and push it back down to the what? Break structure to the what? To the downside. Now, for that reason, we'll have what? A lower high and what? A lower low. Why is it so? Now, we can consider that these 2 points, this is a high and this is also a high. Now, between these two high, which is lower than the other? Of course, this is the low that is lower than the what? The previous high. Or rather, this is the high that is lower than the previous what? High. Now we have what? A lower low. Why is it so? Comparing these two price points, now these are two lows. But when you look, you see that this low went lower than this low. For that reason, we are going to call this low a lower low, right? Now, demand comes in, push price higher again to create what? A lower high. Now, price failing to what? Go above this high again. Now, coming down to break structure to the downside, we have what? A lower low. Repetition of what happened here again. This low is lower than what? The previous low, right? Now, demand will enter the market again, try to push price higher, fail to go above this high. Then supply comes in, push price down again, surpassing this previous lower low to give us what? A new lower low, lower high, and what? Lower low. So it continues on and on and on until what? We stop seeing this kind of what? Movement, right? So the only time we can say that this bearish market structure or this bearish move or this downtrend, whichever one you want to call it, has reversed or has changed, that means we are no longer looking for sell opportunity. Because in this type of market condition, we only want to look for what? Sell opportunity. So when market goes above the previous lower high, now only then are we not looking to what? Continue selling the market. Now we should be considering looking to buy the what? Market, because demand has overwhelmed what? Supply. So this is where supply came into the market, right? And this is where demand came into the market at the lower lows in a bearish market. So if supply are coming in from the lower highs points, structural points, and demand overwhelms the lower high structural points, that is to say buyers have won sellers, okay? Because of course the market is a constant battle between buyers and sellers. So one side of the market wants to buy at a cheaper price and the other side of the market wants to sell at what? Expensive price. But looking at this condition, you can see that only then, only at this point, has the sentiment of the market shifted from what? A bearish market structure to what? A bullish market structure. But we only want to look at the bearish market structure conditions, right? So I will label this area as what? break of structure to the what? To the downside. BOS to the downside. This is also BOS to the what? Downside. BOS to the what? Downside. Also known as what? Break of structure. So this is what we call a bearish market structure, where we have series of lower lows and what? Lower highs. Lower lows and what? Lower highs. Now we can say that this trend is a what? A, a downtrend. Okay, so this is the trend of a bearish market structure, and this is the structure of what? A downtrend, if that makes sense, right? So in this type of market condition, you only want to sell the market. Okay, so you don't buy when the market is going down. Of course, when there is a decrease in price, you want to what? You want to join the sellers to keep pushing price lower. Okay, because the supply area is looking for what? Demand. That means there are more, goods when you come to the, economic aspect. So when there are too many goods chasing fewer money, of course there will be what? A decrease in price, right? Likewise, when there are an increase in demand for fewer goods, there will be what? Increase in price. So if you begin to understand trading using the economic concepts we were taught in school, then you understand that basically trading is just, forex trading is just economics, right? So supply and demand and all that. But we'll talk about supply and demand in the coming class. But for now, we just want to focus on what? Market structure. Because in my last video, when you go to my page, you'll see that I talk about the bullish market structure, and today we just treated bearish market structure. So this is just the simplified, explanation to what? Structure. All right. So having said that, let us quickly go to the chart and look at what we just treated. Now, this is Euro USD. This is Euro USD. Let me go to a different currency pair. Let me head over to, okay. Now, we are going to be looking at Euro AUD. So this is the chart of Euro AUD. So previously we have this. Pay attention. Now, price, let's start from this high. Price puts in this high, then drop to what? Give us this low. And let our price push higher, but fail to go higher above the previous high and continue moving lower and give us a low. Now, because this low is lower than this previous low, I will say that this is what? A lower low, and this is what? A lower high. Now, this is how you know a characteristics of what? A bearish market. That is a market where you'll be looking to only what? Take a sell trade, right? And it continues a lower low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. So at this point, okay, this is the only time you want to be taking what? Sells. All right, because supply overwhelms what? Demand all the time in a bearish market structure until demand overwhelms supply. Okay, that is when price goes above or breaks above the previous or the last lower high. That is only when you know that buyers or demand have what? Overwhelmed supply, or buyers have overwhelmed sellers. Then you should start looking for what? Buy entries or buy opportunity. But in a bearish market structure, you want to only look for what? Sell opportunities. So let us stop it here for now. And in our next class, we'll dive deeper into technical analysis. So thanks for watching. Kindly follow me on my social medias, on YouTube, TikTok most especially, and get yourself acquainted with technical analysis. So thanks for watching. You're welcome.